Hello, everyone. Andrew here, and I'm going to talk to you today about mortgage rates, where experts think they are headed, where we are now, and basically what's happening with the housing industry and what potentially could be happening in the housing industry through 2023. There's a lot of conflicting opinions on this, and I did a lot of research on this. I read a lot of different articles, and I saw everything from where some people were predicting they could come down to about 4.5% by the end of 2023. Some people were even predicting that they could be over 10% by the end of 2023. The answer probably is somewhere in the middle of that, but I'm going to give you some statistics on each one of them. And at the end, I'm going to tell you why I think there's actually a pretty strong case for them getting over 10%. And in my opinion, that's really scary because the price of your monthly payment every month is just going to be so outrageous. It's going to just drop so many people out of the market. So it's really going to hurt the housing industry, housing market, real estate agents, everybody involved in real estate is really going to take a hit if they were to get that high. But let me tell you why. I'll tell you kind of where we're starting today. So, one of the articles that I settled on, because again, I read so many different articles researching this to find this out, but I went with one by Bankrate because they had quotes from three different sources on where they think the interest rates, mortgage rates could be at the end of 2023. So right now, the average 30-year fixed mortgage rate is over 7%. That's the highest it's been in 20 years. And inflation is at 8.2%. That's a 40-year high. And according to the National Association of Realtors, home sales are actually selling at the lowest pace they have in the last 10 years. And so home sales are just hitting the bricks. They're just coming to a halt. And I know as a real estate agent, I'm seeing it firsthand watching our market with fewer things coming on the market and fewer things selling both. And just from my own personal experience here, the phone not ringing with sellers willing to sell. I still have buyers calling me wanting to buy something, but there's just nothing on the market for it because sellers are so reluctant to put their home on the market right now. So a lot of this is my own personal experience, watching our own MLS, and just doing a lot of research on this topic. So the first person that I'm going to quote is Robert Johnson, who is a professor of finance at Creighton University. Okay. And his prediction is that by the end of 2023, the feds will have increased the target Fed fund rate by another 175 to 200 basis points. And if they do that based on what has happened to mortgage rates from the rates that they've already raised, we'll probably see an 8.5% mortgage average at the end of 2023. And again, that was on the high side of it. Okay. Then Rick Sharga, who is the vice president of market intelligence for Anton Data Source, which they analyze real estate data. So their company analyzes real estate data, and he believes that we're going to peak at 8% at the first part of 2023. And based on what happens with inflation, they will gradually go down to 6% to 5.5% by the end of 2023. So that's kind of a silver lining, but I'm going to tell you in a little bit why that's actually not a silver lining. But now, Nadia Evangelo, and I'm sorry, I'm saying her name wrong, I know, but she's the senior economics advisor at the National Association of Realtors, which I'm a member of the National Association of Realtors. She really sees three scenarios that's going to be based on inflation. If inflation continues, if the feds can't get inflation under control and they continue to rise, her prediction is 8.5% by the end of 2023. Or if inflation does stabilize, then we'll probably see rates drop down to 7 to 7.5%. But a third scenario that she sees is the rates dropping to around 5%, but that would be because of the feds continuing to raise their rates and pushing us into a recession. So when I talked about that 5.25% or getting to 5%, those rates are going to happen if we go into a recession, which is a terrible thing for everybody. So nobody wants a recession to happen, but that's what could happen. So the rates could come down as low as 5%, but most likely the lower rates triggered is because of the low demand that's been triggered by a recession. So none of those are great scenarios by any means. As I've been saying in my last couple of videos, I wish the news was better, but it's really not. But the reason I say when I first saw and I first started doing this research on this because I saw a couple of different articles that said rates could get 8 to 10% by the end of 2023. And then most of the financial experts were not agreeing with that. They just didn't, they weren't seeing, I didn't see that rate very high at 10%. But the reason I say that I personally think that rate could get to 10% is because I did some research on what the predictions in 2021 were for the interest rate, mortgage rates for 2022. And this was an article I found that was on CNBC's website. And they said that the mortgage rates will likely rise as the feds raise their rates. Okay, we all knew that was going to happen. But they quoted both Redfin and Realtor.com, both predicting that we would probably see a 3.6% mortgage rate by the end of 2022. Well, we're actually almost double that. We're at over 7%. So most, and the ones I saw, most people in 2021 were predicting rates to go up, but probably only to 3.5 to 4%. That was a prediction. They've doubled those predictions. We're at over 7% now. So by that logic, when the feds continue to raise the rates, which they're going to do it 2 more times this year, and they're going to do it continued into next year. When they continue to do that, it's very likely that we could see double-digit mortgage rates. We could see 10% mortgage rates by the mid to end of 2023. And the way that won't happen, unfortunately, is with a recession. And what's going to probably happen as the feds increase these rates, it's going to push us into a recession. No way around it that I can see. But as they do that, it could, when they raise their rates, we could get up as high as a 10% mortgage rate. That will absolutely devastate the housing market, new home sales, existing home sales. Just so many things are going to happen because of that, and then crash us into a recession after that. So again, I wish I had better news for you, but we're all in this together. Hopefully we can all get through it together. Thank you.